Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the 4 stocks that Warren Buffett is almost certain to buy in 2023. For more videos just like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. Warren Buffett is one of the most accomplished investors of all time, so we're going to be going over 4 of his favorite companies that I think he's going to be buying as the year progresses, and this is going to be for the year of 2023. So without further ado, let's dive into it with one of my favorites and his favorites, which is none other than Apple, which is a giant technology company. Apple is most known for personal laptops, smartphones, as well as various technology accessories. Apple's AAPL share price currently trades at $145 per share, while professionals have price targets which range anywhere from as low as $122 to as high as $214 over the next 12 months. If you're a big Warren Buffett fan, you would know that Apple makes up around 40% of Berkshire Hathaway's portfolio, and Berkshire Hathaway is essentially Warren Buffett's holding company, which he uses to purchase other companies and hold them, and because he has such a large allocation to Apple, clearly it's one of his favorites. That's why it's a no-brainer that he's going to further add to his Apple position in 2023, because he even made a comment that he's willing to add more Apple if the share price engages in any weakness, and if we do end up going into a very negative recession in 2023, we can count on Warren Buffett will buy Apple at a discounted share price. One of the main reasons why Warren Buffett likes Apple so much is their capital return program. Essentially, Apple as a company has repurchased $554 billion worth of its common stock since the beginning of 2013. So Apple is known for having repurchasing programs, which means that the company is so confident that their share price is worth more than it is when they buy back their shares that they are essentially doubling down on themselves. So this confidence is normally translated with a future share price growth, and that's why Apple is one of the best investments on the stock market according to Warren Buffett, and that's another reason why he has such a large allocation to it. Now, I've gotten into a conversation with multiple investors saying that, well, Warren Buffett isn't practicing proper risk management because he has around a 40% allocation to Apple, where there's 2 problems with this. One, Berkshire Hathaway is its own holding company, and it's not necessarily Warren Buffett's personal portfolio. Secondly, Apple grew into a 40% allocation for the company. He did not invest 40% of what Berkshire Hathaway has on their balance sheet in terms of cash and spent it on Apple. So clearly, if he bought Apple at around a 5 to 10% initial allocation and then it gained and grew to 40% of his allocation, then he still practiced proper risk management. And that's what I'm trying to get through to people, that when I say you shouldn't have a 5% or more allocation to a company, I'm talking about you shouldn't invest initially into a company more than a 5 to 10% allocation, because that would be improper risk management. On top of that, Apple has a very good CEO named Tim Cook, who is overseeing a very steady transition more to a subscription-based model for their various services. This is not only going to make the company more resilient during the current stock market environment, but it's also going to increase their overall operational capacity and make them stronger as a company. It's been well known that subscriptions generate predictable and even more cash flow at higher margins, and this is going to help Apple as a business, as well as it's going to help them increase their overall share price, despite any revenue fluctuations that could take place because of the negative macroeconomic environment that we find ourselves in right now. So with all of these good things happening with Apple, it's going to be a no-brainer that most likely Warren Buffett will add to his overall Apple allocation in regards to his Berkshire Hathaway holdings, at least Berkshire Hathaway owning Apple as one of their favorite holdings. So I anticipate that that is going to be a no-brainer heading into 2023, and I personally have bought some Apple shares recently. Next up, we get into a very interesting company that Warren Buffett seems to love. However, I am not so crazy about this company. I like this company. I don't have anything bad to say about this company necessarily, but I do not own this company, and I'm not going to go out of my way to own it, and that is none other than Occidental Petroleum, ticker symbol OXY. The current stock price of this company trades for $63.80 per share, while price targets range anywhere between $60 at minimum and $100 at maximum. The company also offers their investors a dividend yield of 0.81%, which is not that bad. At least you're getting a dividend, which will give you some form of passive income over the next volatile year that we could experience in the stock market. Warren Buffett loves this company because even after he purchased 194 million shares of this oil and gas stock, you can see that he loves this company so much that he plans to buy more of it. Berkshire Hathaway as a company has a ownership stake in the company of around 21.4%, so they own a large portion of this particular company, and it's a clear indicator that Buffett not only loves this company, but he thinks this company is worth buying, unlike myself. There are two main reasons to buy this company, according to this article. The first reason is because when Russia invaded Ukraine, it put a lot of pressure on European energy companies and energy stocks. Because with Russia and Europe cutting off their overall energy collaboration with one another due to this unsanctioned war, we can see other companies such as Occidental Petroleum increase in their overall demand for their products, which has caused this company to increase in their share price as well as their revenues. The second main reason to buy this company is because energy companies have reduced their overall capital investments during this negative macroeconomic and geopolitical environment that we find ourselves in right now. So without any quick way to ramp up oil and gas supply, and as energy commodities become more scarce, companies like Occidental Petroleum are a go-to. So many consumers are rushing toward these companies to get as much as possible from them while the scarcity and these rates are elevated. That's why Buffett's fascination with this particular company might also have to do with their very strong balance sheet. So for the first two reasons, I think these are going to be somewhat short-term, and I don't want to react off of short-term data. I like long-term signals which dictate which companies I buy and hold forever. However, what I do like in the same instance as Buffett is that Warren Buffett likes strong companies that he understands, and I would say this is a strong company because their balance sheet is very put together. On top of that, we can see as of late that the company has slashed their overall net debt. For instance, they used to carry a net debt load of $35.4 billion, and over the last 15 months, they have actually decreased that amount down to just $20.5 billion in just 5 quarters. This is extremely impressive to shave off around $14.9 billion, which is absolutely crazy. So this company creating a stronger balance sheet, seeing that surge in demand, and also being backed by very prominent investors such as Warren Buffett, this is an absolutely phenomenal company. However, again, I personally am not buying this company right now. I think there are better opportunities in other companies that I would rather buy. However, I would leave the rest of the research up to you to determine if this company is good for your portfolio, because great investors can disagree with one another. Otherwise, they would all own literally the exact same company in their portfolios. Up next, we have another company that I'm not really so psyched about, and that is Paramount Global, ticker symbol PARA. This company is a media company, and they currently trade for $19.58 per share, while their price predictions range anywhere between the likes of $11 and $35 over the next year. Many investors believe Warren Buffett is going to almost certainly buy this company in 2023 because Berkshire Hathaway recently purchased around 12.8 million more shares just in one of the most recent quarters. The Oracle of Omaha, which is referring to Warren Buffett, is a huge fan of owning media stocks. The reason for this is regardless about the current economic environment, media stocks that make money off of advertising and or their own subscription-based models somewhat insulate themselves from stock market and economic volatility, making these companies very good defensive companies to buy. So that's why Warren Buffett is a fan of owning companies that are reliant on advertising. Over time, Warren Buffett has also found that buying media companies in particular offer very good returns because after downtrends, they tend to slingshot back up in their overall share price. So in the end, Warren Buffett thinks that this is a very smart move. Another reason why Warren Buffett might seem to really like companies such as Paramount, and Paramount in particular, is because of their fast-growing streaming platform. Paramount's platform for their overall streaming service is gaining a lot of traction. However, I I still think that Disney may be a better buying opportunity than Paramount because of their Disney Plus service. Paramount also has a very good revenue growth. For instance, Paramount's direct-to-consumer segment recognized around 59% revenue growth just in the third quarter, and that is absolutely insane. They have around 67 million subscribers, and this is going to be a very predictable stock due to their overall advertising and ad pricing power in their own communities. So that's why a very prominent investor such as Warren Buffett is so bullish and positive on this particular company. But again, to reiterate, I myself do not like this company because I think there are better opportunities out there, such as Disney. Before we move on to our last stock, I want to add one more thing about Paramount, and that is their theatrical sales have literally surged by 457% through the first 9 months of 2022 compared to the same period last year. So clearly there is huge momentum for this company for their overall sales and their streaming service as well as their overall movies. So from an advertising standpoint, this company could be a great company to own over the long term, but in the meantime, again, I just think that there are better buying opportunities out there. I would disagree with Warren Buffett on this particular company, but only time will tell who is going to be right. Lastly, we have one of my favorite companies, and of course, clearly it's one of Warren Buffett's favorite companies because this is literally Warren Buffett's company, and that is Berkshire Hathaway, and I'm going to refer to their BRK.B shares. Right now, the current share price is $315.32, while professionals believe this company should be worth $362. So clearly, this company is trading at a discount. I absolutely love this company because I like Warren Buffett as an overall investor. So clearly, it would seem that Warren Buffett is going to invest into his own company as well. Like we said in the beginning, Berkshire Hathaway is a holding company with a very strong balance sheet, which means they are very fundamentally solid. Berkshire Hathaway has a balance sheet that has around $30 billion worth of cash and or cash equivalents, such as short-term investments and or U.S. Treasuries. Also, I want to add that both Warren Buffett and Charlie Munger have agreed to buy shares of this company if it reaches an intrinsic discount, which they definitely should. Both Warren Buffett and Charlie Munger are absolutely amazing investors, and they have overseen around $63.1 billion worth of Berkshire Hathaway stock. I like Berkshire Hathaway to diversify myself into the big companies. So I also own a lot of S&P 500 ETFs, such as ticker symbol VOO, which I always think should be a core investment in people's portfolios. But I also have Berkshire Hathaway just because it's an amazing company that also kind of acts as almost an ETF. Even though they're just one singular company, they own a lot of companies underneath their own umbrella because after all, they are a holding company. So despite the overall bearish market that we are in for the S&P 500 and the US economy, even though the results haven't been very good as of late, which is why investors think it's signaling a possible recession or a very bad recession in 2023, it seems that very strong companies are going to use this time to buy back their various shares. And share buyback programs mean that these companies are so confident that these companies are worth more that they are willing to buy their own shares back, and that's absolutely phenomenal. So all in all, I would say this list is extremely good, but from this list, I would buy Apple as well as Berkshire Hathaway. Apple's ticker symbol is AAPL, and Berkshire Hathaway, I'm going to buy the BRK.B shares. So with that being said, I would love to hear your thoughts down below about what you think of Warren Buffett and Charlie Munger. Remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.